Regulus Resources is a Canadian exploration company active in South America and led by CEO John Black, an economic geologist with over 35 years of exploration experience. Black was part of the management of Antares Minerals, known for Haquira, the giant copper deposit in Peru. After they sold Antares, the same team identified a large copper and gold porphyry, also in Peru. The focus of Regulus Resources is now on this project, called the Antacore project. John Black, presenting Regulus Resources.
Good day, John Black.
Hello, how are you?
I'm good, how are you?
Doing well.
Yeah, early?
Oh, not too bad here.
Not too bad, that's good to hear. I believe there's a special story here with you and Peru and the discovery. In a few minutes, can you tell the story to us?
Well, our team we're a group of explorations that specializes in finding large copper and copper gold deposits. We've got a lot of experience in South America, and so Peru seems to be a place that we explore a lot in. We've done it once by discovering one project, and this Antacore project that we're on right now has all the earmarks of being a really special, very large copper gold deposit. With a time frame that shows that it could be in development relatively soon for these type of large undeveloped projects. So it's something that this is kind of a once-in-a-lifetime type opportunity as an exploration geologist to be working on a project like this.
Okay. Willem, you invited John Black and Regulus Resources. Why is that?
Yeah, well, actually we met in Miami in February this year, shortly before COVID really hit. And we liked the story. It's a little bit a difficult story. In one way, it's a very easy story because it is a strong discovery, remarkable discovery, very near a producing mine. So just like the Telfer, the Greatland situations, you're quite sure the company will be built, will be bought out, and the mine will be built. But that can take a little while. And I think for John and for Regulus, the past 1 or 2 years have been quite frustrating. The environment to finance the company was quite difficult, especially especially till COVID hit. And then all the attention of investors went to precious metals, and this is especially a copper discovery. Am I right, John?
Yeah, that sums it up pretty well, but we are starting to see a little bit of interest come back into the copper space. So it's a great time for people to take a look at an opportunity like this.
Yeah, so the stock jumped quite a bit higher in the last few weeks, fortunately. But I'm very interested to hear your latest presentation, so the floor is yours.
Okay, great. Thanks, Willem. Okay, it's an honor and a pleasure really to be here at the CDFund Discovery Day. This is an outstanding lineup, great group of peers, some excellent projects, and an excellent forum for investors to learn more about a number of projects. So we'd like to thank everybody very much for setting this up. We'd really hope to meet a lot of people in person at this meeting, but obviously that's not possible. So hopefully by next year we'll be able to do that again. Regulus is a publicly traded company. We're traded on the TSX Venture in Canada, as well as the OGCQX in the US and the Peruvian Exchange out of Lima. So all the forward-looking type statements apply to us on this, and please invest with caution on this. I thought I'd start by just giving a few words on what type of a company we are as Regulus. Each junior company can determine what commodity they look for, which countries they work in, or even what stage of project. And the best way to sum up the type of company that we are is we're a group of very seasoned explorationists with a lot of experience in South America. And we use that experience to identify projects that have the opportunity to produce a very large copper or copper gold project, the type of project that a major mining company would be interested in acquiring when we get into high prices in the metal cycle. So we try to identify these projects essentially as close to discovery as possible, ideally with a few drill holes in, some indications, and maybe metal prices are down or the owner doesn't know what they have and they're willing to part with it to allow us to go forward with the project. So that's the strategy we have. Then once we acquire the project, we drill that project out, we show the full size potential of project, and we de-risk the project through approximately a pre-feasibility stage, therefore adding as much value. So it's a very steep part of the curve that's labeled speculation on this diagram. So what we're trying to do is add as much value as quickly as possible. It means that we have to be very careful on picking excellent projects, the type project that will go all the way through. The reason we do this is oftentimes between a pre-feasibility stage project and the next big value add steep curve is when it goes into production. That can be a long stretch of time and leave our shareholders stranded. So we look for that early monetization event. So this is the style of company we are. Regulus is actually the second company under the same management team. Our previous company was called Antares Minerals. With Antares, we had the good fortune to discover the Hikira deposit in southern Peru, which we acquired for about $15 million in stage payments. We drilled that project out, spent about $50 million on the project, and then were able to sell that to First Quantum Minerals in 2010 for $650 million. So a nice return for our shareholders. So we've executed our strategy once and made a major discovery. We learned a lot along the way on that. And we now think as Regulus, which spun out of that sale, we're on to an equally exciting, perhaps even more exciting project in the Antiquary project in northern Peru. Just a quick look at our share structure on this. You can see the details on the right-hand side, but the main point that we wanted to indicate on this is that management is very much aligned with our shareholders. As senior management, we have a little over 13% of the company. It's not simply a legacy position. This is a position that we actively invest every private placement, and oftentimes, as recently when prices are down, we go to open market purchases. So we believe in this project. We're strongly vested in ourselves. Another important point is that Route 1 is a large fund out of San Francisco. They own about 24%. They did very well with our previous company, and they strongly back us to go forward. So they're a cornerstone investor. It's a nice anchor for us to have as we move forward with the project. Also point out that we do have coverage from 3 Canadian houses in the lower right, you can see on the diagram. As you might guess from my description of the strategy of the company, we're very focused on the end game. Many junior companies are trying to get those exciting numbers early or big drill hits. We do that, of course, as well. But we always try to put stuff into perspective of what we're exploring we believe has the potential to be a major mine. And for our strategy to develop that to a certain stage and then monetize it by selling it means we have to do everything that it takes to have that mine have the best chance of going into development. That means we're very actively involved in long-term community and environmental projects. We intentionally look for large, long-life mines, what we refer to as a multi-generational mine. This is because it's much easier to provide sustainable benefits in the long term if we have a mine that operates for decades. Many companies are built on a series of short 10-year mines. It's very difficult to manage the on-off on those, and it can be very challenging for the communities that are associated with those because it's boom and bust. And then finally, it's the technical approach we take on these projects is very critical. We have to do work, even though we state that our intention is to sell this project to a developer, we have to do work of the same quality that they would do to attract them to look at the project. If they're taking a look at the project to potentially acquire the project, they have to be very comfortable that we're collecting all the correct data for this project. I'd like to refer you to our website. There are some outstanding videos that our Chief Geological Officer, Kevin Heather, has put together working with Laura Brangwyn from our IR group to demonstrate how we work and some of the details of what we work, as well as some great technical descriptions of the project, more than we can go into today. So let's dive into the project. The Antiquary project's located in northern Peru. We can see in the location diagram on the left. It's in a stretch of the Andes that are extremely well endowed, both in large copper and large gold deposits. And many of the copper deposits have a significant amount of gold and silver associated with them as well. This means there are a number of developed mines in the immediate area of the project, as well as a number of underdeveloped opportunities waiting to come along. This results in excellent infrastructure, great workforce availability in the area, and as everyone knows, Peru is a mining country. It's the second largest copper producer in the world and the largest gold producer in South America. So it's a great place to have a project like this. As we dive into the immediate area of the project, in the image on the left-hand side of the diagram, we can see our land position. What we own is 100% of the red claims, and we have an option to earn up to a 70% interest in the large pink block. That option is from a subsidiary of Buenaventura. So the land position we've consolidated sits just to the north of the Tantuatay mine. I mentioned that we're near to mines. By near, we mean immediately near to mines. Tantuatay immediately abuts our property to the southwest, and the Cerro Corona mine is 7 kilometers to the south of us. The Tantuatay mine is operated by a joint venture called the Comalaiche Joint Venture. The Comalaiche Joint Venture consists of 3 parties: Buenaventura, Southern Peru Copper, which is Grupo Mexico's Peruvian subsidiary, and a small Peruvian family company called Espro. Collectively, they operate the joint venture that operates the Tantuatay mine. At Tantuatai, it's a heap leach gold-silver operation. They're mining the oxide cap over the top of a very extensive copper-gold sulfide deposit at depth. That same copper-gold sulfide deposit at depth on the Tantuatai property extends onto our Antiquary project. So we have an extension, we have a portion of what's a larger deposit that is shared with our neighbors who are an operating company. They're essentially pre-stripping the oxides off the top of this large copper-gold sulfide opportunity. That's very important in our strategy on this, because even though, as Willem mentioned, this is a complex project, it's an outstanding geologic opportunity, an outstanding deposit, as we'll see, but it does have the complexity that it's a shared property. It's one that we have a portion of the deposit and the neighbors have a portion of the deposit. But that challenge can also be an opportunity, because it means as they mine through those oxides and they run out of oxides in about 2025, there's an excellent opportunity for them to make a transition, a brownfields transition, into a larger copper gold sulfide deposit. And at Antiquary, we have a key portion of that deposit, and we think a significantly key portion that it's required to assume our project to make that go forward. Meanwhile, about 7 kilometers to the south, we have Cerro Corona, which is a mine operated by Gold Fields. Currently, one of their probably top 2 mines worldwide. It's one of the best projects they have in the world on this. It's a milling operation. They're mining a gold copper porphyry system, but they also have a relatively short remaining time of life of the mine on this. They run out of their ore in 2025 from the pit. They'll continue to operate on low-grade stockpile, but there'll be a notable drop-off in production and a notable drop-off in employment for the people that live in the area. So there's an opportunity for the various parties that are currently operating quite profitable mines in the area to make a transition into a larger project that has a much longer mine life. 2025 is also an interesting point, as we're one of the few copper stories with more of a development stage project in these presentations. But there's a looming copper supply gap coming up. Most people predict that would be quite open by about 2025. We're due to increased demand due to electrification of just about every aspect of our lives right now, and a dropping grade in most of the mines and even dropping production in many of the current copper mines. And quite frankly, our industry is not very good about discovering new mines and particularly putting them into production. It's a long lead time normally to get a mine like this into production. So that'll produce a gap which is likely to result in a higher copper price. It's important to note that our project does not need higher gold or copper prices to go forward. We believe it'll be perfectly economically viable at current prices or even lower. But when we see these elevated prices like we've seen now in gold for some time, and we believe we'll see in copper pretty soon, what that produces is a point in time where the major mining companies are doing very well. They're cashed up and they're encouraged to continue to grow and look for other opportunities. And what we'd like to do is produce an opportunity right at the point in time where they're looking for just such an opportunity. So let's take a look at the resource we already have. This is the resource that we put out last year. It's based on our stage 1 exploration program. This is about 23,000 meters of drilling that we completed in late 2018, put the resource out in March of 2019. In the lower right-hand diagram, we can see that indicated resources total 250 million tons and inferred resources total 267 million tons, so over 500 million tons of mineralization at an average copper equivalent grade of about 0.7, so relatively good, relatively high copper grade for an open pit opportunity. To put that into perspective, in copper alone, we have about 5 billion pounds of copper, over 4.5 million ounces of gold, and over 100 million ounces of silver. Keep in mind the gold and silver are really a byproduct on this project. It's a copper-driven opportunity, but with very significant additional metals associated with it. We knew this project, when we acquired the project, we knew it had potential for that type of size and quite frankly beyond. It's very important to note that the resource that we just took a look at is an interim resource. It's based on our first phase of drilling. We're well underway on our phase 2 program. It's been suspended due to COVID, but it'll start again, we hope, next week. Looks like we'll be up and drilling by early next week. And that will likely add in a very significant continued expansion of that. So that's a first look at the resource with plenty of room for that to continue to grow. As I mentioned, we knew it had potential to be large. We knew it had potential to have quite good grades when we acquired the project. But more recently, as we've been homebound due to COVID, we've had a little more time to slice and dice and take the project apart. And so if we take a look at a section on the right-hand side, we can see in the far upper right corner a little insert that shows an outline of a pit. The black circular outline shows the conceptual pit that constrains the resource that I just presented. The resource that I just presented is only on Regulus ground. That does not include any mineralization that's on the neighboring ground. We do have a data sharing agreement that allows us to see what they have and to share data with them, but we're, for obvious reasons, not allowed to report what they have on their ground. But on the section we see, we can show the resource on our side, the colored blocks or the block model, the resource block model on this. And you can see on the left side of the diagram, we can't show the mineralization that extends into the neighbor's ground on this. But two things really jump out on this diagram. One is that we have a lot of relatively high grade in this deposit, and much of that is very close to the surface. So there'd be very early access to some of the best grades in the project. And the overall strip ratio of this project is remarkably low as it's currently conceived. In this conceptual pit that constrains our resource, if we look at the strip ratio for all mineralization in the pit, including the neighbor's mineralization, it's less than 1-to-1 strip ratio, 0.85. This means for every ton of ore, we have to move less than 1 ton of waste rock. That's a remarkably low strip. This would be one of the lowest strip ratios for a large copper or copper gold open pit mine in the world, quite frankly. If we look at the left-hand side of the diagram, we see the mineralization, the inferred and indicated resources sliced in 100-meter intervals from the surface. And we can see that much of the mineralization is weighted to the surface, including much of that high grade. So this high grade at surface and low strip ratio is probably will emerge as the fundamental driver for the economics of the project. It's a big deposit, it's a very good grade deposit, but it's remarkably low strip ratio, and we get early access to that high grade. As I mentioned, the mineralization that we report to date, and which we believe will continue to grow as we drill more, is only a portion of the project overall. On this diagram, we can see a little bit better how we report this mineralization. The black outline is the conceptual pit outline on the diagram at left. We have 100% of the red claims and up to 30 to 70% of the pink claims, an option for that. So the mineralization we report is only on the red claims inside that conceptual pit. Obviously, there must be quite a bit of mineralization on the neighboring ground, just the way the pit is pulled and shows on this. The most recently reported resource by the Comalaiche joint venture for tantalite sulfides is over 900 million tons of mineralization at similar grades to what we have. So the combined deposit is quite large. We can see this in the bar charts on the right-hand side of the diagram. The far left bar chart is the current antiquary resource expressed in copper equivalent, so 8 billion pounds of copper equivalent. When we combine that with the CMC, the Comalaiche Mining Company, or tantalite sulfides next door, we get over 25 billion pounds of copper. And keep in mind, this mineralization is wide open. This will continue to grow. But at that size, it's already quite comparable to the Toromocho and Las Bambas resources at the time those projects were put into production. These are two of the most recently developed mega mines in Peru, tier 1 mines by any stretch of the imagination and of interest to any major mining company. And not too far off from SolGold's Cascabel project up in Ecuador, which is drawing a lot of attention right now. So we're already in that league, particularly when we combine the deposits, with potential for them to continue to grow remarkably. Another way to take a look at the project is this is a list of the top 20 copper intercepts reported by junior companies since 2018. So these are copper dominant intercepts. They're ordered by a grade equivalent thickness on the right-hand side of the diagram. And we can see that 5 of the best holes reported worldwide come from the Antiquary project. The only company that's consistently delivering better drill results than us is SolGold for their Cascabel project in northern Ecuador. But we like to point out many of their drill intercepts start at depth, including as much as a kilometer of depth, whereas many of our drill intercepts start very close to the surface. In essence, the Cascabel project will be a bulk underground mine in northern Peru, in northern Ecuador, whereas Antiquary will be a very low strip open pit copper gold project in a more developed mining country in Peru. Also, 3 of these 5 intercepts are flagged with red dots on the left side. These 3 drill holes were not utilized for the most recent resource calculation. 2 were not drilled at the time of the resource calculation, and 1 was by itself at that time. So our continued drilling is expanding the resource, and we look forward to next year announcing a new resource with a significant upgrade. I mentioned that we have potential to continue to grow the size of this deposit. And we'll take a very quick look at this. There's a lot more information that Kevin's put together and some short videos on our website to go into detail. But this is the ground magnetic data that was available for the project when we acquired the project. And the feature on this that really caught our attention was that distinct geophysical anomaly that's shown as a donut-type feature in this diagram. In the manner that we process this data, when we see a magnetic high with an expressed higher zone around the outer edges of it on this, this is a classic signature of a major intrusive center, the type intrusive center that elsewhere in Peru in these same rocks produces major porphyry copper deposits, oftentimes with very significant skarn associated with it. To date, we've only drilled in about the southwest quarter of this geophysical feature. That's been due to limitations on our permitting and what we were allowed to drill. And quite frankly, we had a lot of work to do there to get that drilling done. That's allowed us to report over 500 million tons of resource. But we recently received our permits that will allow us to jump to this northern area that we call Anta Norte. We received those permits right at the start of the year. We were set up to begin drilling in March when COVID hit, and that forced us to shut down. But we currently have drill rigs up in the project area right now. We're preparing pads, and we're getting ready to start drilling, which will be late this week or early next week for the drilling to commence. And we're very much looking forward to this initial drilling on the other 3 quarters of the target. We have been reaching towards the north from our current drill pads, and we see a number of drill intercepts labeled on the right-hand side, and the drill collars are labeled on this diagram. That's as far north as we could go. Those holes have been angled to the north, and over 60% of our drill meterage to the north right now has resulted in reportable intercepts with some fairly spectacular results. So even though it's a greenfields area, in some sense a new target, we've already been tickling the southern margin of it with some pretty good results. So we have high anticipation that the drilling will be successful as we move that direction. Another way to take a look at the Anta Norte project, this is an oblique profile through the project. We see several things on this. In the conceptual pit, we see our mineralized blocks in the colors on this diagram, once again emphasizing some very good high-grade zones in this and very low strip ratio on the project overall. We can see that we can't show the mineralization onto the neighbor's ground, and where they're pre-stripping effectively the tantalite oxides off the top of their sulfides at depth. And the mineralization is open to the north, to the right-hand side of the diagram. We have significant mineralization that's outside of the pit. This is not part of what we report right now. But as we drill to the north, we anticipate we'll push that north wall and capture some of that mineralization. And if I now superimpose the geophysical data that we just looked at onto this, we can see that that distinct annular magnetic anomaly that we have lies just to the north of the pit. And so any mineralization that we encounter in that will likely expand the pit. It increases the size of the overall portion of the deposit that we have, and effectively strengthens our hand at the poker table that we'll get into for a district consolidation here. So just a quick summary of the catalysts on this. As I mentioned, we received our drill permits early this year. We're very excited to step to the north. We've had to pause that program, but the camp's being populated right now. Everybody's going through inductions, and we should be drilling by next week. We're looking very much forward to completing our phase 2 program, which will allow us to put out an updated mineral resource about mid next year. But we'll likely continue right into a phase 3 program to continue to drill off what we find in that northern area. Another important thing that will be coming out in the near term is we'll have metallurgical results towards the end of this year from our first battery of well-constrained metallurgical tests. One of the challenges on this project is the metallurgy on how we move forward, and we're very much tackling that as we go forward. There's quite a bit of information on our website for that. So just in a quick summary, we're a very seasoned group of explorationists. This is what we do. We've done it successfully once before. We learned a lot in that process. We're on to an incredibly exciting copper deposit. There are very few of these large copper deposits that are undeveloped and in the hands of junior companies, and therefore potentially available to major mining companies as they become more aggressive in the M&A space looking for these. It's by any stretch of the imagination what the majors would call a tier 1 asset. We have a proven strategy. As I mentioned, we've executed that before, and we have quality partners in all senses in terms of our shareholders, from our key shareholder in Route 1 down to an increasing retail following that's starting to pick up on this. And we're seeing that this is just an outstanding time to be delivering a project like this. So thanks everybody for your time. Please don't hesitate to contact us. And I mentioned there's quite a lot of information on our website. Thanks.
Thank you, Mr. Black. Stick with us. We got a few minutes left for Q&A.
Okay.
You mentioned that you'll start drilling next week.
Yes.
But during the last couple of months, we just saw a news flash, actually, that Peru is reopening for international flights on October 5th for countries in the region. Were you able to visit the project?
Actually, we're quite fortunate. As I mentioned, we work in a region that has a large presence of qualified workforce. So our principal office as a company is really in Cajamarca, Peru. That's our working office. It's where all the core storage is, and most of our geologists live. So even though I haven't been able to visit in the last few months, or Kevin or some of our more senior offshore management, we have a great workforce in site. And so our geo team is there. We have to direct it a little bit remotely right now ourselves, but we're able to work in country.
Can I have a follow-up question on that? When was the last time you visited the project yourself?
In February, right before things shut down. So.
And you're quite sure that the drills will start turning again next week?
Well, we are in a kind of a challenging environment with COVID. The drills are up on site now. We have to go through a series of required inductions, safety inductions. This is true for any project, but even more so with the COVID protocols right now. We have to constantly test all of the people that are working, and it's not just ourselves and our drill crew, it's the community members that work with us. And then we have to make certain that the community is very comfortable with what we're doing there. For some time now, for several months, it's been legally possible for a project like this to operate in Peru. But we wanted to take our time and make sure that the communities are comfortable, that they don't feel we're putting them at risk. Many of these are small mountain towns. They tend to be elderly populations in the communities. They're at risk. And you can imagine if we come in as outsiders and there's an increase in COVID, whether it's due to us or not, it could be perceived that it is, and that can jeopardize our social license. So we just want to make sure that we do that very carefully. Because
Peru was quite hard hit in this corona crisis, wasn't it?
It was, absolutely. They did an outstanding job of shutting things down very quickly, and I was quite impressed with that. I thought that was a way to really tackle it. But in the analysis, in the end, there's such a large component of an informal economy in Peru that it was very difficult for them to truly shut things down. A lot of people make a living day to day, and we're getting out and moving about. And keep in mind, it is winter in South America, so it's the height of a normal flu season. So people with respiratory illnesses are more susceptible to COVID as well. And so it's been hit pretty hard. It has plateaued and is going down now. And we're starting, even within our own group as well as others, minds around us, everybody's beginning to become accustomed to how we can go forward and work in this challenging environment.
And back to your company, back to your project, if I look at your current valuation market cap of only 150 million, we've seen exploration companies who haven't even drilled yet having a valuation of over 100 million. You already have over 2 million ounces of gold, a lot of copper. So how severe is the undervaluation?
There are a number of different ways you can take a look at these at a pre-production story like this, which is really we're at resource definition. We don't have a PEA out that we can show for the project yet. So one way to take a look at this is valuing by the in situ metals on this. If we convert the overall deposit to in situ copper equivalent, that'd be about 8 billion pounds, as I mentioned. That values at us at just slightly over a penny a pound of copper equivalent in the ground. Our experience with our previous company
was sorry.
Yeah.
Sorry for my remarks, but weren't recent M&A deals done on 10 cents per pound?
A more typical average for big copper projects on this at sort of a PEA to pre-feasibility stage is about 4 cents a pound on there. And that's a average over the last 20 years, including our sale to First Quantum on this. So there's plenty of room for us to increase in valuation as we de-risk the project and as eyes turn back to copper projects right now for the resource in hand. But then we also have the potential to strongly increase the size of the resource. And that's the nice part about this project is it has both aspects. It has a resource in hand and effectively almost a brownfield situation, but it has potential to be substantially increased in size. So the current resource in hand is undervalued by marks to market and previous sales that were probably valued at about a third of what it should be. on this as when it gets to the point where there's a typical M&A transaction on it, and then we have that potential to significantly increase the size. And I would point out that projects with a strong gold component sometimes receive a little bit of an extra kicker on this. So the valuation that you mentioned on this, we see those when we have a strong gold portion to the project, which we clearly do here.
Okay, I'm afraid we'll have to leave it there. Thank you, John Black, CEO of Regulus Resources. Thank you for your time.
Thank you very much. Take care.